Now, this is something I've heard over the years, many times over and over. Lots of people say, I have a strategy and it's not working out. Okay, I'm not able to trade the futures. All right, I was able to trade forex this way or options, and that could be true. But I don't, it all depends on the strategy that you're actually trading. A lot of people focus on trading support and resistance, and I don't quite get that, but I slightly do because I found myself even at the beginning of my trading career kind of trading support and resistance. And even at the time, I didn't know I was trading support and resistance because I was just trading based on the idea, hey, the market's moving higher. Let me take it on a dip. Meaning, let me take a trade going long on a pullback or sell at a higher price and go short. Those type things where the market was breaking. I saw it breaking levels, pulling back to a level, but I didn't know anything about supply and demand. And it wasn't until I learned about supply and demand that's when everything changed for me. My life changed. My eyes started getting a little bit more focused, and my mind and things just really started opening up. It started to click, but it took time for me to be able to truly put together a solid strategy that worked for me trading range charts. Okay, and that's when everything unfolded for me, and my consistency started to take off. All right, and since then I've been moving upward. But you have to have a solid strategy. And I just believe support and resistance style trading is not the way. I'm not saying you can't take, and we don't see plenty of opportunities where the market, people always say, well, it just tapped into support just now and it just moved away. It didn't come and hit my demand zone. That does happen. We don't control the markets. You never will. So please don't get upset if you see the market not pull into or tap into a supply zone or demand zone. This is where people really get, it kills me because they really like think that a certain strategy doesn't work out. Nothing is 100% going to work. You have to understand that. And not every trade or at a zone, even a high probability zone, is going to work out 100%. This is a business of probability. If you know what that term means, then you know exactly what I'm talking about. We are looking to take trades based on a certain setup, based on a strategy. And if it doesn't work out, we have to practice what? Proper trade management. Get out while we're ahead so that we don't lose or take any drawdown and don't lose much. That way we can live to see another trade, right? So, I'm going to show you a couple examples when it comes to support and resistance. A lot of people like to take trades, what I like to call break and retest. It's where the market breaks through an area of support or resistance and comes right back to that area. And then you see where the market fails to that area and it wants to attempt to push lower. 90% of the time, I shouldn't say 90 because I really don't know the actual percentage, but I would say this. Most times, what you will see happen is the market will break through an area, say, of resistance, come back, because once we break resistance, it becomes support, or once we break support, it becomes resistance. The market will break through a level or support, a resistance area. As an example, I'm going to show you here. It will come right back to that area. And then a lot of people, what they'll do is they'll start to see bullish momentum in the market, and then what they'll do is they'll jump right into a trade with no set strategy or no confirmation. To them, when they see the market bouncing off a support area or bouncing off a resistance area, it's rejection, and that's all they're doing. They're chasing. That's what that is, and I'm guilty of that too. When I first started, I was chasing the market just like a lot of people do when they first start off. But the thing that really helps people over time, and they start to slowly understand, it doesn't have anything to do with school, the charts. It's got everything to do with psychology. You have to, because that's a big part of the puzzle. And once you put the whole visual aspect, the whole learning process, the concepts, everything, which comes to the whole technical side of trading, and you are able to merge that with the psychological piece, and you find a perfect fit together that works for you, then that's when things are really going to start clicking and move in the same motion. You can't be understanding what's going on in the charts and then the psychology working in reverse too. They can't be working in opposite, because then they're going to conflict. They're going to pound up against each other. So you have to have both parts in place and to where they fit together like a beautiful puzzle. Okay, so you have to manage the whole psychological piece too, and a lot of people struggle with that, whether it's fear, greed, just not being able to be consistent in the sense of have a structure. Maybe you're not a disciplined trader, okay? Maybe you're not simply waiting. You understand, okay, I got a strategy. I learned this from somebody, but you're not putting it into proper work because you are still chasing the market. You are still, even if you're in, say for example, you're still practicing, you're in demo or simulation, whatever the case is, and you're still learning, all right? And this is what I see a lot of people do right here. They start off trading one contract or two contract in sim and demolition. That's fine. But then they allow for some reason to start trading like 10 contracts or 15 contracts or some crazy amount of contracts. Like, what good does that do you? You're playing with your psyche then, because all you're doing is setting yourself up for failure. Because if you could trade one contract, then you should be able to trade 10 contracts, right? But don't set yourself up for failure, because what I tell people all the time is try to do this. Whatever you come into the market with, meaning money to put into your brokerage account, okay, your personal brokerage account, all right, and let's say you're only able to trade 2 contracts, all right, don't start going into practicing mode, okay, and trading 10 contracts. Just trade the same number of contracts and treat it as if when you're in, or say in demo mode or simulation mode, as you would if you were going in live trading. Because then what you're doing, you're messing with your whole psychology, and you're not allowing yourself as a trader to really build up confidence in yourself. And if you have no confidence, you know, because you start trading with 10 contracts in demo and then you start losing, and then you start looking at, oh, in demo, I'm showing I lost $2,000 today. You're really setting yourself up for failure and call yourself a major setback. So don't do that. That's why I always talk about taking steps. And part of that steps is trading the appropriate number of contracts and treat it as if you were, even though you're in demo or sim, treating it as if you are trading live. Okay. The same thing, you know, because again, if you could trade 2 contracts in demo or sim, you should be able to trade 2 contracts consistently when you go live or whatever, and just build up over time is what I'm trying to say. Don't start psyching your mind out. It's very easy to get this right here confused and start psyching yourself out, okay? So I'm going to show you the mistakes that a lot of people take when they trade specifically support and resistance, and this is why I don't like trade break and retest, all right? Because to me, I'll say this before, it makes sense to trade at the area in which the momentum, I'm not saying momentum, but momentum is a very important part of trading, where the move started to take place, because that's where the momentum started to come into the market and started moving higher. So anyways, take a look at what we see right here. The market is making, of course, movement to the upside. Okay, so you should only be bullish, right? But let me show you an example here, and we're going to take a look at a few others. What I like to classify as a simple break and retest: push up, dip, pull back, decent retracement, break structure. Okay, pulls back, breaks higher. Okay, we got a slightly higher high there. All right, and then we get a dip to the downside. Breaks above here. We got another break of structure right here above 375 right there. Now you see when we broke this area right here, structure at 375, okay, as the market pushed higher here, look what happens. This is what people will do. They will, I'm going to grab this arrow line right quick and show you. They will take, this break right here was a break of resistance. They will wait for the market come back to this area right here, and they start to see momentum pushing or coming to the market with this bullish candle to the upside. They'll jump in. Okay, this is a break and retest. It is a break of structure, but it's a break and retest because it broke resistance, came back and tested which was resistance is now support. So they will see this bullish candle start to form. Oh, the market has come down to this area, is wicketing away from it. That's a sign of rejection, bullish activity at support now. Let me jump into the trade. Why would you do that when you have areas of, right below it is an area of what? Demand, even though it's tested, it's low probability area demand, but it's also demand resting right here. Here's an area of demand. This is a high probability area of demand as well, okay? And as you can see right here where it tapped into this area of support, look, break, retest, came right back to it. You get into the trade and then it comes down against you, okay? And that's what happens a lot of times because the market it makes sense to get into the trade where say for instance, there was a swing that aided in this break of structure here, an area where there's aggressive buying at the origination point, okay, versus getting right here after the market broke the tops right here. You don't want to do that, you know. There's a low probability area of demand right here, okay, which it does reject, comes down to it, and it tests this area here as well. Even if you got into this trade at the rejection where this low probability zone is right here. Look where it goes. It goes from 61 all the way up to 98. Even down here, it comes down. It didn't 100% test this area. It came down at 344, I believe, just 2 points away. I mean, so anyways, this was a demand zone right here. Let's say it tapped into it. It pushes up, okay? It pushes up, you know, from 345 or 344 all the way up to 398. Nice run right there. So what I'm saying is look for the, if you're trading supply and demand, which just makes more sense, you're looking for opportunities to take the trade back at where the movement started at versus trying to buy the tops. Don't do that. The same thing if the market's pushing lower. Don't try to sell the bottoms. It breaks through an area of support, and support now becomes resistance, and that's a break and retest back to an area of resistance now. Don't try to sell that area. Wait for it to pull back to, say, a supply zone. It will make sense because a lot of times they'll come to that area of support and resistance, tap off of it or break off of it, reject it, fake traders out just to go back and pull to, in this case here, an area of demand, okay? All right, so let's look at some other examples right quick. All right, here's another example just to show you right quick. All right, break a structure to the upside. Look, this is support, guys, okay? It was resistance. The market breaks through it. Pulls back right here at now support. Look, bullish candle. Most times a lot of people they'll start jumping into a trade right there. Oh, look at it rejecting the area of support now. Pushes up, folds against you. You get stopped out. What does it do? It's coming down here to tap into this untested area of high probability demand. Taps into it, takes off to the upside, breaks above here, and makes a new high. This is the reason why supply and demand is just, it works out so much beautiful because, again, just think of it as in terms of you're getting into the trade where the momentum out of an area of demand starts at, okay? You don't want to buy the tops or sell the bottoms. Please don't do that. Example of supply right here, okay? Look, market pushes lower, it makes a low, pulls back, break structure right here below 140, 148, 149, right? What does it do? It pulls all the way back to the area of supply, all right? So wait for it to pull back into the area where the movement started, where there was aggressive selling to the downside, okay? Here's an area of supply right here. The market pushes down, but low, okay? Pulls back, lower high, low. Pulls back pretty significant here. It did break above this high right here, but all it's doing is pretty much faking traders out, all right, getting them to think that the market is maybe getting run to the upside, but you have to, again, follow market structure, understand what's going on here, and then break structure lower. Now, this is a nice area of supply resting right here. But look what happened when it broke structure right here below 906. Broke structure, okay, and then it pulls back right here to this area of, which was once support, now it's resistance, okay? Pulls back. This bearish candle right here, a lot of people will say, oh, the market's rejecting this area right here on a pullback. Let me go short. They go short, and they get stopped out. Simple as that. Why? Because the market wants to test higher areas where there is clearly supply, where the market was pushing lower, all right? And this is what we have to understand, the part that I talk about, the banks and institutions. They're the ones that are the driving force behind the curtains. They're the ones that are pushing the market in a certain direction. And as retail traders, we just want to think smart like them and look for those opportunities. Look for the footprint. Look where they have transacted at and trade smart when the market gets back to those areas. Aggressive areas selling. This is still a high probability supply zone because it didn't get... actually, no, this is low probability. Low probability, but again, even in a low probability zone, I always talk about, be more cautious, but yes, it can still reject that area. A lot of transaction took place there selling-wise, okay? The market gets back there. It rejects it. Does it break deeper into the zone? Yes. Does not mean that it's not going to work out. Just look at your lower time frame and look for clear on signs of rejection or failure at the zone to go short. But if you got into the trade, I think this is a trade that I actually took and I discussed a few days ago. In this area here, say around 970, when you notice, say, a setup off of your lower time frame chart, I talk about the strategy and how I trade it using paired charts, market. So what you see here is a zone that's marked off my higher time frame. So then what I do is I move down to my lower time frame, looking for a specific setup that's part of the strategy in which I trade. I talk about that in many videos here on the channel. So please take the time to watch it. Today I'm not going over the strategy in full. I'm just talking about, a means of why people, having problems when it comes to trading certain styles or certain ways, especially support and resistance. So in this case here, if you got into a trade and you saw rejection off of your lower time frame at 970, you were able to take the trade, say down to 935. So you picked up a lot of points if you were able to ride that trade, straight through. So again, we're not interested in taking trades when it pulls back to resistance right here, because look, you get into a trade there, boom, you got stopped out. And that's what happens with a lot of support and resistance style setups like that, okay? So my purpose today was just really to show you and explain, this is the reason why I trade supply and demand. Not telling anyone to trade the way I do, but this is my explanation, letting you know too, as well as why the opportunities tends to work out better if you wait for the market to pull back to that area where the buying or the aggressive buying and selling took place at, because typically when you buy or sell at an area of support and resistance, a break and retest, you're buying or selling halfway through a move. And I talked about that in the past. So why would you want to buy at the 50% of an area, say for example, versus waiting for it to retrace deeper to where the market actually started? That's where the origination was. That's where the start was, where the market, the momentum picked up and we see demand to the upside, or we see the momentum push down with a selling to the downside. Take the trades back at where it started at. Always think that, that's what I tell people. Look for where the market started making that move at versus getting into a trade halfway through a move. That's why, to me, I don't trade support and resistance. And lots of times you'll get a lot of fake outs at an area of, especially on a break and retest at support and resistance. So just be careful. Not telling anyone, and you do trade how you want to trade. Whatever works for you, you be consistent with it. If you trade support and resistance and it works for you, then fine, do so. Whatever works for you. So that's one thing here on the channel that I'm not here to do, is persuade anybody to a specific way of actually trading. I'm just here to share my experience and how I actually trade, and tell you and let you know the reasons, the do's and don'ts of things, of why I do or don't do things. Okay, so that's all I'm here to really try to explain in this video here. But yeah, because people always, they contact me. I've run and come across, and just the people I know over and known over time, or still know, they have struggled with strategies and why they didn't work. They learned something from somewhere, paid for a course somewhere, and they get frustrated because they say, hey, it just that strategy didn't work for me. So what do you recommend? That's the thing. I don't give recommendations and tell people what to trade. I just say, well, maybe try this and see if it works for you. If it doesn't, then move on to something else. Don't put a lot of energy into it if you find that it's not working for you, because then you're just spinning wheels, and please don't try to recreate something. But anyways, hopefully this video, is provided you with some value, kind of open your eyes a little bit more about support and resistance and about break and retest, and specifically why I don't. So you got to kind of back test this stuff on your own, and even forward test it, back testing, going back on your charts, and maybe doing a market replay and then testing it against when the market is live as well. But whatever, again, works for you, please be consistent with that. Stick with it. Don't jump around. That's another big mistake I see people doing all the time, is jumping from one thing to another. They do not, I don't know what it is with people. They cannot be consistent enough to see things through. Okay, and in the moment something doesn't work, they want to point fingers because at someone. But look, if people are profitable and making money, then that's good, because like here in this community here, I share what I know and through the way I trade, and people are consistent. They're making money, whether it's they're trading their own capital or trading and making money through prop firms or whatever it is. They're still consistent. They've learned something or educated themselves on something just for watching the videos, maybe even put their own twist on it, and now they're making money. So if you're interested in joining the Discord, I'm going to stop right now and say the link to it is down in the description portion of the video. People always send me DMs all the time or messages asking how they can join the Discord. It's right down in the description portion of the video. Click on that and you can join. For all those that are interested in becoming an elite member, because I get a slew of messages on the daily, just scroll down right below in the description portion of the video, right below the Discord link. You'll see one that says become an elite member. You can sign up right through that link. Just click on that. 2 tiers will pop up. One will say loyal channel supporter. The other one will say elite channel supporter. Choose the one that says elite channel supporter. Is $6.99 a month. That's all it is. Very minimal cost. But you get access to, I just did a video yesterday, a trade breakdown. But you get access to all the trade breakdown videos that I posted there. to where I go into deep detail about my trades that I take, in discussion to, you know, why I took the trade, leading up to the trade, talking about where I replaced my stop, profit target, things of that nature. Just giving you a rundown of trades that I've taken and posted over on the Discord community and going into detail. And a lot of them are trades that I've taken, don't even post over in the community because I don't have all the time in the world every single day to post every trade I take on the Discord. So a lot of times I'll say those for those that are elite members, you know, because it's a private community for those that are interested. But $6.99 a month for that type of activity or access. So basically what you're doing is supporting my efforts as a content creator here on YouTube, because it's part of the YouTube platform. And by doing so, you get things back, you know, those rewards, those perks. So you get the trade breakdowns and the emojis, the badges, and the priority reply to comments. And you also receive the video playlist, okay? And that's a series of videos that I've hand selected off of the channel here, put together ones that I think that carry the most weight when it comes to the strategy and how I trade. But if you're interested and you want to become an elite member, it's just $6.99 a month, $7 a month. You know, most people spend that in one of their favorite beverages that they purchase on a daily, you know. So we're talking about monthly. Most people spend tens of dollars weekly, you know, maybe $100+ weekly on certain beverages or drinks or lunch or whatever the case is. And here's something that could change your life and turn things around if you're really serious, for $7 a month, not daily, not weekly, but for a month. Okay. So anyways, if you're interested, that link is down in the description portion of the video. And that's all I have for you today, guys. I'm getting ready to get over into the market because it is 9:30 Eastern time right now. So the market is just now opening up. I could tell by looking at this little price line here that it's starting to jump. So take care if you're trading today. Be safe in the markets, and I'll see everyone in the next video. Take care.